Can you really get rich with stocks? It's one of the questions in personal finance. Not just make a little extra money, not just save enough for retirement, but actually become wealthy. The internet makes it seem easy. You see stories of people turning small investments into millions. You see screenshots of huge gains and influencers claiming they achieved financial freedom before turning 30. It creates the impression that the stock market is a shortcut to wealth. But here's the truth. While stocks absolutely can make people rich, the reality is much less glamorous than social media makes it seem. Because most real wealth in the stock market is built slowly, very slowly, and often very boringly. That's the part most people don't want to hear. So in this video, we're going to answer the question honestly. Can you really get rich with stocks? The short answer is yes. Historically, stocks have created enormous wealth for millions of people. But the way that wealth is usually built is different from the fantasy people imagine. When you buy stocks, you're buying ownership in businesses. And businesses tend to grow over time. They create products, generate profits, expand into new markets, and increase in value. As those businesses grow, the value of your investments can grow too. That's the foundation of investing. But many beginners misunderstand something important. Stocks are not magic. They are not guaranteed wealth. And they're definitely not a get-rich-quick system. They're simply a tool. And whether that tool creates wealth or destroys money depends on how it's used. Now, if there's one concept that explains how ordinary people become wealthy through investing, it's this: compounding. Compounding is what happens when your investments generate returns, and then those returns begin generating returns themselves. At first, the growth feels slow, painfully slow. This is the stage where many people quit because nothing exciting seems to be happening. But over time, compounding becomes powerful. Your gains become larger. Your portfolio grows faster. And eventually growth starts building on itself. That's why time matters so much in investing. The stock market often rewards patience more than intelligence. Someone investing consistently for 30 years will outperform someone constantly chasing quick profits. Imagine someone investing $500 every month into a diversified stock fund. Nothing flashy, no risky trading, no attempts to predict the market, just steady investing over decades. Over time, that person could build hundreds of thousands or even millions of dollars. Not through luck, not through secret strategies, but through consistency and patience. That's one of the biggest truths about wealth building. Most investing success looks boring while it's happening. Now let's talk about how people become rich through stocks. The first and most realistic path is long-term investing through index funds. Instead of trying to predict which company will dominate the future, investors buy funds that own hundreds or even thousands of businesses at once. This spreads risk across the market. Invest consistently. Keep costs low. Stay invested for many years. That's it. And because it sounds simple, many people underestimate it. But simple does not mean ineffective. In fact, long-term diversified investing has historically been one of the most reliable ways to build wealth. The difficult part is emotional, because markets do not move upward forever. There will be crashes, recessions, fear, panic. And during those moments, many investors make terrible decisions. They sell when prices collapse. They panic when headlines predict disaster. And often they abandon good strategies at the worst possible time. That's one of the great ironies of investing. People often buy when excitement is highest and sell when fear is strongest. Exactly backwards. Now let's talk about trading, because this is what gets the most attention online. Day trading, options trading, swing trading. The idea of making money quickly from market movements is extremely attractive. And yes, some traders make fortunes, but many traders lose money, not because they're unintelligent, but because trading is extremely difficult. It requires discipline, emotional control, risk management, and experience. Most people underestimate how psychologically demanding trading is. Fear causes people to sell too early. Greed pushes them into taking excessive risks. And social media makes things worse because it constantly highlights success stories while hiding the losses. You see huge profits, You rarely see the blown-up accounts. And this creates one of the biggest misconceptions about stocks: the belief that investing is supposed to make you rich quickly. That belief destroys more portfolios than market crashes ever will. Because once people expect fast results, patience disappears. Normal investing suddenly feels too slow. And when investing feels too slow, people start chasing excitement. They move into risky speculation, leverage, meme stocks, and trends. Not because those things are necessarily smart, but because they promise speed. But the market has a brutal way of punishing unrealistic expectations. The truth is that real investing is usually boring. There's no excitement in consistently buying diversified investments every month for 20 years. No viral moments. No overnight transformation. But boring strategies are often the strategies that survive. And survival matters. Because investing is not just about making money. It's about keeping it. So after everything we've discussed, let's answer the main question directly. Can you really get rich with stocks? Yes. But the path is usually slower and less glamorous than people expect. Most successful investors did not get rich overnight. They got rich gradually, by investing consistently, avoiding catastrophic mistakes, staying invested through volatility, and allowing compounding to work. That's the real secret. Not brilliance, not trading, not predicting market movements. Mostly discipline, because investing is deeply psychological. That's why behavior often matters more than intelligence in investing. A simple strategy followed consistently usually beats a brilliant strategy abandoned emotionally. And maybe that's the biggest lesson. The stock market rewards patience more than prediction. So the real question is not whether stocks can make you rich. The real question is whether you can stay disciplined long enough to let them.